various candlestick patterns. So we started with what? The candlestick patterns or bearish reversal patterns. And we said one that we should note is that they are what? Formed at the bottom of a downtrend. So if let's say an asset is what? Moving down, and you want to what? Buy it, or you want to predict that the asset will move up, you have to wait until you see what? A bullish pattern formed before you can confirm that there is a potential for the asset to actually what? Go up. And that bullish pattern will what? Will form at the bottom of what? A downtrend, meaning it is forming to change the trend from downward upward. I hope it's okay. Good. So the bullish patterns or bearish reverse patterns, they are formed at the bottom of what? Downtrend. So the opposite is that bearish patterns, they are also formed what? At the top of what? An upward or an uptrend. You understand? Bearish patterns, you can also trade them as well. Bullish reversal patterns, because they change the trend from what? From bearish to what? To bullish. So now we begin to study what? The various types of bullish patterns. This is what we're going to do. I'll share my screen, then we do a quick recap, then we move on. Is it set? Okay. So the first bullish candlestick cut is what we call the hammer. Please, are you hearing me? It seems there is network glitches.
We can hear you.
Yes, please.
Okay. So the first one is what? Hammer. So the hammer in the image, that is what we have a black circle around. It looks like what? A hammer. As we learned previously, a candlestick has what? Body and wicks. So hammer, it will have a short body at the top with a long wick or with a long tail. This shows that what? The buyers has been able to what? To push it. They have been able to push it. You know, the sellers, once the candlestick opened, the sellers were pushing it down. And now the buyers have been able to push it upward to form that hammer shape. A hammer candlestick can be in red or green, but however, if you want a signal, you choose the green hammers. You understand? The green hammers to represent a bullish pattern. Please, are you okay with this?
Yes.
So you see from the image, it is formed at the bottom of a downtrend. It was formed at the bottom of a downtrend. Then after it was formed, we saw an upward movement. Okay. Then the next one is what? An inverse hammer or inverted hammer. You see, it is also circle. It is also in the circle, and this time around, the hammer is what? Inverted. The hammer is inverted. So now the wick is on top and the body is down. What it means is that the candlestick was open. The seller push it down small, and then the buyers push it up. When they push it up, the sellers tried to push it down in, but they were not able to what? they were not able to tone it down and they left it in that form. It means that the banks are taking over. And that's why we also classify it for a bullish pattern. I hope this is also clear. So just note them. Whenever you see them, that's what they should tell you that what a bullish pattern has formed. So now hammer and inverted hammer, they are what? They are bullish patterns. So we went to the third one. This was bullish engulfing pattern. With the bullish engulfing pattern, you have to see two candlesticks at the bottom of the downtrend. There will be first a short red candlestick, followed by what? A green candlestick. But the green candlestick, the body of the green candlestick will totally cover the previous red candlestick. And when this is formed at the bottom, we call it what? We call it a bullish pattern. Therefore, the best will take over. So take note, this is called bullish engulfing pattern. Please, when you see this pattern forming, wait the second candle to what? Completely close, or yes, close above or engulf it before you enter. So these are the things that we all combine and we bring signals to ourselves on the platform. So you should take note of them. Now, hammer, inverted hammer, bullish engulfing pattern, they are all patterns. Okay. Now we are going to the next one, which is what? Piercing line. The piercing line. It has a Can I
Hello,
continue?
Chief. Hello.
Mr. Kumi, please.
I don't know if I can ask a question at this point or you want to finish before.
No, ask a question.
Okay. I think you were talking about you waiting for the second green candle to fully engulf the red.
Yes.
But what time frame should you looking at?
It depends on your preferred time frame.
Okay.
Maybe if you are a scalper and you are using 1 minute time frame. But then I've already told us that if you want to analyze your chart correctly, you should consider long-term times.
Fine.
Because when you see this like in the 15 chart, the potential of what? Upward movement is higher than seeing this in 1 minute. 1 minute chart.
Okay.
Me personally, one day I will show you a trick. When I see that maybe let's want to buy a coin, maybe it is falling. First, I will go there and consider, okay, 1 hour chart. How many red have I seen? Maybe 1 hour, I've seen like 6, or I've seen like 4. If 4 is in for me, now go to the short about 8 minutes or 1 minute, or if let's say immediately I take 3 minutes forming a bullish pattern, I can enter. I think by then maybe 4 hours this is for me to enter. So I will go and look for signal and I'll enter. But then if it start falling within 1 hour, then you go and use 1 minute and you see a bullish pattern there and you enter. It means you are trying to what? Enter and leave the market area, other than and staying longer and make some maybe much more than the quick one. I hope it's okay.
That's fine. Thank you.
Okay. So the next one is what? Is the piercing line. This time around, it's like we will have two equal candlesticks. With the red will followed by what? Another green. But then the green, which is lower than the red, it should at least be able to move and close at least half of the previous candle and close at the half of the candle. If you can see, there's a line there showing that it has crossed half of the previous candle. In the best are what? Taking over. So if it doesn't cross half and doesn't close at half and you enter in, it means you didn't wait for the pattern to complete. Hope this is also clear. Before then, as we were yesterday, we said that when a pattern is formed, we come to call break. Breakout mean it has to deviate from the original trend. Maybe you run your pattern. There should be, and these are some of the breakouts. We will say half of the candle, it has broken out. So always wait for the candle or the pattern to complete. If it does complete and you enter, you might lose or you run into loss. So always wait the candle complete. Let it break out before you come. Okay. And in the Pearson one, okay. Okay. Now the Pearson, one thing I have to say is that there will be a gap afterwards. After the red candle, gaps are also an indicators that we use to determine the movement of an asset. You remember when we were talking about CME gaps, we say Bitcoin has formed CME gap. We have to look for it to be filled. So in this we will treat gaps specially, but in this I will take the time to explain something here. We use the arrow, I think it's better. It's only this candlestick open here and came to close at place. Are we following? Now, ideally, if it is at this place, the next opening should have been at here. You understand? But then look at where we are seeing the next opening. You got it here. You understand? Meaning the gap between is a gap. Now, the sellers try to pull it down small. But then whenever a gap is formed, mostly the gap has to be filled. Therefore, if buyers fill the gap to this place, they continue to move it up until they cross half the previous candle. And when this happens, the buyers are taking over. So if you want to gaps, me personally, I am trading and it is, let's say, in the down.
Hello.
Yes.
Hello, please. My network was not helping, so please can you go back?
With the gap aspect
on the PSX. The PSX.
Okay. Okay, I believe the rest you got the gap well. With the I said we should have two candles, two strong candles, one red, one green. But then the green that follows should be able to pump enough to close at least half of the previous red candle. So the arrow there is at half, it indicating that it has closed above half the previous red candle. And you could see that the candle still sticks the seems equal in size, you understand. But then, one unique feature about the piercing line is what? It's gap. So you see a gap. If a gap between the closure and the opening of the two candles. So let's look at the gap aspect. I was saying that this candlestick, the red one opened at the top here and closed at this place. But ideally, the next candlestick should have started this place. But it didn't start there. It opened at this place. Okay, so then let's try what? They try to push it down to more like this. But then because there was a gap, whenever you see a gap in a trade, most of the time the gaps have to be filled up. So if let's say in a downtrend and there's a what, push it upward and go and fill it before we come back and continue. By then some traders who are experienced, they will enter when the gap is filled, they exit. But you know that after filling of the gap, maybe the trend will continue. Let's say if you are in a gap and you see a gap, when you see a gap, they dip it downward to fill the gap before we continue. So I was referring us back to when we were learning CME gaps, whereby we got Bitcoin forming one Friday, where we have to wait for Bitcoin today to cover the gap before Bitcoin started moving up. But then once we fill the gap, that is not all. We have to wait for the buyer to pull it along to cover at least or close the candle at least half of the previous red candle. When this happens, you can say what pattern is a bullish pattern and now the trend has changed. Is it okay now? Continue.
Yes, please. Yes.
Okay.
Yes.
Then we went to the fifth one, which is what? The Morningstar. The Morningstar. Morningstar involves three clusters. But then because it is a bullish, always come at the bottom for a downward trend. We will see first large red, followed by a small red, and a larger green will come. So this time around, that is where the shape comes. It forms a U shape. You form a U shape. So by consider the little red in between them, because that is a major indicator for us to know that a Morningstar is what is forming. These days I've been seeing Morningstar in most analysis. So this type of pattern is formed. You can conclude that a bullish pattern has formed. Therefore, we can buy and profit. Is it clear? So once you say, as we are learning, you study the shapes and make sure they are always on your eyes. So whenever you have a break on them, you know that this thing has formed. Sometimes if you don't remember, keep the notes. Whenever something is forming, you don't know, you go through your notes and check if those that have come in forming for you. Go to the sixth one. That one, he said 3 white squares. This time, this is very clear. When you see a downtrend, then it will be followed by what? 3 big consecutive green candles. very big consecutive green candles. But then their tails are short, they are not long, their tails are short. It means the buyers are what? Taking over. The buyers are taking over. And take note, the opening. See, this is the closure, the first can. See, the next one was like, so it's like it will be like a small gap. Then this one will close, then the next will follow. So the closure and opening are almost at the same place. They are all at the same place. Then you will say the trend has changed and now we are moving towards bullish trend. I hope it's okay. Let's go. Now there's bullish pattern that we will talk about. We have what we call Harami Candlestick. You know, the candlestick was invented by Japanese. So when they say Harami means what? A pregnant, something that is pregnant. So the patterns look like something is what? Is pregnant. So we have a bullish Harami and what? A bearish Harami. So now that we are studying what? The bullish patterns, we will study bullish Harami. So we will see a long candlestick. And then the opening and closure of the green candlestick will be like in the middle of what? The previous red candlestick. Just like in it's like the red is what? Regulated whichever way. If the English is what the green candlestick. And we say bullish Harami form. So the next.
Can't hear you well.
Should I go over?
I said the sound is too low.
Okay. Can I? I can't increase my own volume. Can you hear me now?
Yes, please.
So Harami means pregnant. So see this picture, Harami. You see a red candle, but then next green candle, it looks like it is opening and in the middle of the previous red candle, presenting as the red impregnated with what? The green candlestick. When we see something like this, we call it a bullish Harami pattern. Is it clear?
Yes.
Okay.
Yes, please. Yes, it's clear.
Okay. Now I'm going to bearish patterns or bullish reversal patterns. So they are opposite. They are opposite of what we learn. We learn that bullish patterns would form at the bottom of downtrend. So the same to bearish. They are also form the top of what? An upward. They are formed at the top of an upward trend. And also, whatever we learn from the bullish patterns, we are going to see the opposite of them in the what? In the bearish patterns. So we have seen the first opposite, which is where they are formed, top and bottom. Now in the in the bullish patterns, we saw hammer. Now here we have the same hammer, but then we call it hanging because it is formed at the top of the upward or the bullish. So we have seen hammer here. So whenever you see a hammer formed at the top of when we call it a bearish pattern. Is it okay? And then the name is not hammer here. We call it hanging. It looks like a man hanging on a tail in the air. Is it clear?
Yes.
Okay. Yes, please. Now we have an inverted hammer. Its opposite is right here. It was also formed on top of an uptrend. But then here we call it shooting star. Shooting star. So it's like the tail is shooting something in the air. Shooting star. Because it is the opposite, I don't want to explain the nature of the candles. You understand? Because we can explain it ourselves. If we can, I will give it as an assignment. Okay, so an inverted hammer forming at the top of an uptrend is a bearish pattern. A bearish pattern, but then we call it star. Okay. Now we saw bullish engulfing pattern. Here we have bearish engulfing pattern. This one, it is also formed at the top of an uptrend. But then we will see a green candlestick followed by a red one, which would tell you cover or close higher above the red candlestick. The green candlestick, we call it bearish engulfing pattern. I hope it's clear. Yes. Good. Now we saw Morningstar. Here we have evening star forming at the top of an upward trend. Now you will see one big green followed by a small green. A small green where it looks as if the opening and closure of the candle is almost at the same place, which is an indecisive candle. Good. Then will be followed by a big red, formed an inverted U. That is an evening star, opposite of morning star. And it is a bearish pattern. Can we move on? Three white what? Is it horse? Here we have three rows of the white. Same thing, you will see consecutive huge red candlesticks forming at the top of an upward trend with short wick. When this form, we call it a bearish pattern. Now the next one is the dark cloud cover. The dark cloud cover. Then I have to edit it. I think I edited it in. It's not bullish. Okay. It's like the PSN line. I hope you can see it. It's at the PSN line. So we will have a green candle, big one, followed by what? And almost the same candlestick, but in red. Then we will use the gaps to confirm. So with this, and withdraw. Okay. With this, we saw the opening price, as they are saying, the opening price of the green candlestick. You can see it from the green. Then we saw the closing. Then it left a gap and opened the red candlestick. So it's like an opposite of what? So the bearish part. Next one, bearish around.
Boss, your voice is low. It has gone low right now.
Is it okay now?
Still low.
Still, it's okay.
Wow. Let me exit and
It's
join
okay
back.
now. It's okay now.
It's okay. It's okay. It's okay.
Okay. So did you get the cloud opposite of you get that?
Please, it's occurring again. It's occurring again.
Okay?
I don't know if you move away from your mic.
Is it okay?
Still not okay.
It's okay.
No, it's not okay.
It's not okay. Okay. Let me exit and come back again. Hello. Is it okay now?
We can manage it small, but I don't know that of the others.
Oh, okay. I'm talking louder now.
It may be from your surroundings. Maybe if you have locked yourself in your room or something. It may be from your surroundings, or maybe you are using an earpiece or something.
Is it okay?
Yes.
Okay. So now the dark cloud cover I said is opposite of the PSN line, and therefore we call it a bearish pattern. And it comes with what? Two identical candlesticks, one green and one red. But then the opening there is a gap between the opening and the closure of two candles. So if you can see from the screen, you could see that the closing price of the previous green candle is far away from the opening of the red candle. When they forms, we should look for it what to fill or at least. Can you see?
No.
I can't see your screen.
No.
Hey, I shared it too. I see now.
We can see now.
Okay, so I'm saying that if you look at the closing price of the green candle, the opening price of the red candle, there is a gap. You understand? And you have to wait for it to be filled and even cover half of what the body of the previous green candle. Then we say a dark cloud cover, which is opposite of PN line, as from. Therefore, the trend has changed from uptrend to downtrend. Okay, so then the next one is the Harami. We said in the bullish Harami, we have bearish Harami. In long green candlestick, and then by red candlestick, and it looks like the green has impregnated the red candlestick. I hope that is bearish Harami. It has reversed the trend from upward to downward. Okay, so from there you go to the continuation patterns. They are patterns that form and they never change the trend. They rather serve as a resting place for the to rest and continue the trend. You understand? So we call continuation pattern. So we have bullish continuation and bearish continuation pattern. We have bullish continuation pattern and a bearish continuation pattern. So the first one is what we call a doji. A doji form when the opening and closure a candlestick is almost the same. They are almost at the same place, and the wicks are almost equal. So you can see the circle, the red and green. They are doji. So they are indecisive candles. They are indecisive candles. So let's say if we are in an uptrend and a doji green is formed, we will continue the trend. We will continue the up. So that one we will call it bullish continuation path. If we are in a downtrend and we see a doji forming, we will say that we will continue with the trend. So we will call it a bearish continuation pattern. I hope it's clear. What it means is that the buyers and sellers, upon all the struggles, no one won the game. But then we look at the big picture. That is the trend that we are moving. Then we continue our trend. That's why I call it a bullish continuation or bearish continuation pattern. So if you can check, when we are learning morning and evening star like this, have you seen a doji is formed in between the bigger candlesticks? Have you seen it?
Yeah, we can. I can.
Yes. So when it happens like this one we can call is it doji, evening doji, evening doji. The same thing when you go to the Morningstar, you will see a red doji in between. It will it is also for when they form with an evening star, this around they don't continue the trend, they rather reverse them. So doji found in morning and evening star, they don't continue the trend. However, they reverse them. That is the negative aspect. Though they continue a trend, but then if you form in what the morning and the evening stars, they rather reverse the trend. Okay. And you see Doji in the trend, it didn't change the trend. It doesn't change the trend. So the next one is what? The spinning top. They are also like the Doji, but then they have what? They have long waves. They have so they also from their what? They are indecision.
So
They are
if you are
indecision,
here
but then
and
they
you are
follow
not
what?
joining our training
They
program,
follow
you are
the
missing
trend.
out.
So if
Seriously.
we are in an
What are
uptrend,
you waiting for?
they will continue for us. If we are in a trend, they will continue for us. Then we have 3 methods. They are what? They are also continuation patterns. They are also continuation patterns. We have bearish, because they are bearish continuation patterns. When we see foreign trade methods, they are bearish continuation patterns. So from the image, you could see there is a downtrend. Then we see what? 3 green candlesticks. 3 green candlesticks, which are what? It looks as if the third one and the first one are almost equal. And then they don't cover the previous red candle. Even upon all the three signs, they are not able to cover the previous red candlestick. When this form, it means a falling trade methods has formed, and they will continue the down. So we've been seeing this a lot in trade. Sometimes the thing is falling and it will make some sharp upward move. We will think that we are turning the thing to upward movement. So once we have seen 3 green candlesticks, this can be like the 3 white horse. So we can enter. You enter, then they dip over you. Good. So this time the 3 candlestick will form, but then they will not be able to cover the previous red candlestick. When this forms, is what? A bearish continuation pattern. Is opposite to the rising 3 methods. There will be an uptrend followed by 3 red candles, but then they will not be able to engulf the previous green. And so when this also happens, we call it what? The bullish continuation pattern. Then they continue that. That is the rising 3 methods. So we have actually learned 4 continuation patterns, 7 bullish patterns, then 7 bearish patterns. So if you are able to master all these patterns that we have learned today, from now onwards, you will be able to make trade decisions by looking at the candlesticks, looking at the patterns that they form. You know when to enter. Then you, of course, when you get your target, you can leave. This is clear.
Yes, please.
Yes, please.
Okay. Please, any question? Any question? I think today we were supposed to do something different, but then because we have to go back, we will not be able to do what we are supposed to do today. So please, next time we have to be paying attention next time, and also try to come early. Please, we will not be dragging ourselves. If not, we would have we were supposed to do something else. But then there are something that we have before we continue. So I will take this opportunity to talk about trends. Then tomorrow we learn about the other types of patterns that we are supposed to know. So with candlestick patterns, we have covered almost 90% of what we are supposed to know in what technical analysis. Maybe if there are other special patterns, we will drop them and we will learn about it. But keep in mind, this is psychology. Once you know how to read your candlestick, understanding the market sentiment of a candlestick, and knowing these special candlesticks patterns, of course, you are doing something. You are progressively becoming a good trader. So you will be knowing when to enter and when to leave. So our next assignments is actually we are trading. We will tell you, do this, show your entry, what pattern do you use to enter, and so forth. Hope you understand what I'm saying.
Yes.
Okay. Now, when we say trend, we have been saying upward trend, downtrend. The trend, the direction of the market. So, of course, we all know we have bullish and bearish. Then we have sideways. The sideways is what? Those rotating phase. They are just resting. They are neither going up, they are neither going down. So these are the three types of trends that we have. Then we are supposed to know what we call price action. You will hear price action. When we say price action, is the study of the price movement in the market. So if you are able to study the movement of a price in the market, we term it as what? Price action. Price action is actually the easiest way we can identify the trend, and the easiest way we identify. So studying price movement is called price action, and is the easiest way we can identify the trend. Now, if we are going to elaborate the uptrend and downtrend, when an asset is forming, we will see high. As we were studying the candlestick, we have a higher a lower price. You understand? So we say a price is upward. When we see the formation, when we see a movement of higher, meaning the highest higher and the lows are lower. So this we can go to our platform. Let's say I will go to Binance and we will see it. And downtrend means we are recording lower lows, meaning there are consecutive lows. This low is lower than the previous low. Then their highs, the highs of those candles are they are lower highs. When we say the trend is a downtrend. With the size or horizontal, we don't have any higher or lower anything. It's like they either move up or down, and they mostly happens at what we call support resistance. It's also a broader topic that we will consider. I hope now you understand the uptrend, the low trend, the price action. Can I go or it's okay? Let me see if I can get answer. Okay. Please, can you see this picture? The first one is what? An uptrend. The first one is an uptrend. So the H is what? Higher high. And the H what? Higher low. So it means what? The high, the next high is what? It's higher than all the previous high. So the third one is also higher than all the second high. But then they are lower. Lows are lower. The second low is higher than the previous low. They are higher lows. Then the second image is what? In a downtrend. So you will see lower high, meaning once they hit one high, the rest will also be lower than the first high, meaning they can never get to the top. They are constantly showing lower highs. But then the lows will also will be lower lows. I hope the explanation is okay now. Can I continue?
Yes.
Okay. Then you can also hear a term called swing high. When we say swing high, it's a peak. A peak where there's what will start to decline. So as we are saying an upward trend, we have high highs. We have higher highs. There will be a higher high that will never be queried by another higher high. And when it happens with a swing high. However, whenever we see a higher high, a swing high is formed. You understand? So when we see consecutive swing highs, we will say the asset is in an upward direction. But then there will be one unique swing high amongst them. When that happens and they are surrounded with lower swing highs, then we take the higher one as our swing high. Is it okay?
Yes.
Swing low. Low is also a point at which the asset will dip or to fall, but begin to reverse. So this time instead of P, we use from good. And this one too, anytime an asset dip and try to reverse, we call it swing low. But consecutive swing lows are indicates a downtrend. And we will have a unique swing low, which will stand among the other swing lows. Then take it as our swing low for that trend. And when this happens, it's indication that we are not changing the direction of the trend. So when you see consecutive swing lows forming, and one as you among them, the next one is not able to reach that one. It should do that over and we are going up. When you see a consecutive swing high, and there is one stand among them, but then the next swing is not able to reach it. It should tell you that the trend and we are moving downwards. I hope it's also clear. Then we have what we call reversal and retracement. Reversal is when the direction changes. So when it changes, it will continue in the new direction for a longer period. That is to be called reversal. And we will be able to identify reversal by knowing what? The patterns. By knowing the pattern. So if a bullish reversal is formed, it means what? We are changing the trend from what? Downward trend. Then we have retracement. Retracements are what? Temporary reversals. Temporary reversals. But then they don't change the direction of a trend. They don't change the direction of a trend. It's like a resting phase. They trace and what? And continue the trend. So most times when a pattern is break out, we to wait for what? A retracement. After the retracement, we have something we call confirmation. So when it retraces and it begins to what? Continue the trend, then we confirm that, oh, now the trend has changed. Let's say we want upward movement. Now we confirm that we are going up. So you enter at the confirmation. So recent by confirmation, then you enter. You put your stop loss. You put your stop loss at where there was a swing high or a swing low. That will be your stop loss. So we are learning as we have. I hope the trend and the terms here are all well enough to be done or to be understood. Sorry. Now let's go to Binance. You can also the trend of Bitcoin. General, please, what is the trend? It's in 5 minutes. Please, what trend do you see? Also.
It's moving downwards.
Okay, so this is what? A downtrend. We are going to locate the highs and the lows. So you could see from here. You see, it's a high price here. Please, have you seen it? Yes. When the price went to this place, it started moving down. So it is what? A high. So every candlestick has what? A high and a low. So you could see this into you see from here. Yes. This small red candlestick. Sorry, you can see that the red candlestick. It also hits a low price and all green candlestick. Have you seen it? So there shortly they change what? They change the trend. Then that's a massive move. So as the price are going, you can see a lot of highs lot lows. Good. Now, swing high and swing lows. High and swing lows, they are just the same. For example, if you look at this upward, you can see here is an upward trend. So the highs, we have a high here. Okay. We have a high here. Okay, we have another high. We have another high here. Please, are we following? We have a high here. They are all swing highs until we find out a swing high here. It should feed everything. So this will be our swing high. However, they are surrounded by what? A consecutive or repeated swing highs. Great. So the 429 something will be our swing high. Now, if you consider the downtrend, we could see the lower lows. Lower lows. We can start from here. We have a lower low here. We can have a lower low here. We can also have we can have. So now we are what? We are following it to finally give us a low which stands tall among them, and we will not see another lower low again. If we make it, this can be the one of them, and then we have to wait for confirmation. Now, if you look at this one, this is this is a lower low, but this is what? A higher low. The next one is a higher low. So it means there's some changes coming. Wait for, or you add other indicators to it to confirm that. We go for Bitcoin, Mr. Charles. Boss, we are seeing this low. I think it will be fine now. We go long for Bitcoin. I hope we saw the lower lows and the higher highs. Okay. Now let's go and see retracements. Let's go and see retracements. You could see we in what? A downtrend. But then you could see from here to this place, it retraced. It's like it begins to change direction. Here will be retraced. Here will be retracement. Then we follow to here. then we retrace again. So you could see the retracement is not changing the trend. It rests and what? It continues with what? It continues with the trend. So whenever it pauses and moves, it pauses and continues, we call them retracement. But then a reverse is seen. A reversal is seen, for example, the top here. The top here. This type of pattern is on top here. Let's identify it before. Who can tell me pattern here? Please, what pattern is that?
Bearish pattern.
Yeah, but the name, bearish what?
Bearish.
It's bearish what? Is it hammer? Is it inverted hammer? Is it Morningstar? So this is a bearish engulfing pattern. This is a bearish engulfing pattern. Okay. What about this one? What pattern is this one? What pattern is that? Please, we will close right now. After identifying this pattern, we will close. What?
Evening star.
No. Evening star, you have to see 3 candles. So. This is also what? A bullish engulfing pattern. This is also a bullish engulfing pattern. Oh, today we can have a lot of pattern here. Let me screenshot this thing. We will use it to time it. Can have
That's it.
Mr. Kumi, are you there? Mr. Kumi, are you there? Please, what pattern is there? Please, are you there?
Yes, I'm there.
Please, can you see the market?
Oh, this is the Morningstar.
What?
Oh, the 3 white, yes.
Hey. Yeah, boss. This is what the three.
The 3 white, yes.
Oh, this is a continuation pattern.
This is Morningstar.
Continuation pattern. Bearish continuation pattern.
Oh, okay.
So you can cross check.
Okay.
Pretty bearish continuation pattern. Have a strong in the middle. After that, they continue today. That is what the three rising bottom. Or is it rising something? Let me go and check. I think the image is very nice. So I have to take a screen. This is falling 3 minutes. Sorry. Have you seen it? So have you seen it?
Yes.
So some you didn't wait to see. You should have a clue of what is going on. So if we go back, you could see what the three rising something falling. So you see it's the same as what it's the same as what we learned. Let's see if we can see. Okay, let me start this one. This one.
Hello, please, are you done?
Recording.
Hello, please, are you done?
I can't hear you.
No, I'm not done.
Oh, okay. When you are done, just
Can
send
you
me
hear
a
me?
hi on WhatsApp.
Okay. Let's focus. Okay. Now we are what? We are recording higher lows. We are recording higher lows. Have you seen it? Instead of lower lows, we are recording higher lows, which means that the trend is what changing from the trend. Practically, we can enter here and long it, then we put our stop loss at 40,541.50. Okay, I'm done. This will be assignment. Let's prepare for tomorrow. Tomorrow we will learn the other types of patterns. We will learn the other type of pattern. Without any question, please go and refer to the notes I posted in the group. Create your own group and send them so that whenever you forget about something, you can go there and refer. Please do that. Okay, we shall meet tomorrow if there is no question. Thank you for attending.
Thank you, sir.